It is week 16 of the Des Moines real estate market update, and this is my weekly update. I've done it now. This is my fifth week, I believe, and we're starting to talk this week about a new topic, and that is home pricing trends. We're going to talk tonight and see if home pricing is on the rise or what's going on with pricing, or if it's on the downside here. So this is a new graphic I've not created before, so bear with me here. And I do want to point out initially that we're talking about specifically single family resale properties. This is not the entire market, so I'm focusing on pricing on what is the majority of our market, which is single family resale. We have 53% of our home inventory is single family resale. So I thought I would just focus this pricing trends on that category only for tonight. You'll see we have the market broke down here for pricing trends in three different graphics. You've got median list price. That's the pricing that we currently have on the market. We have pending price, and we have sold price. The pending price is the price at which an offer has been accepted, but we don't know what the final sale price is. So this is a graph of all the pricing on a daily basis, the median price of the homes as they are basically going under contract. So let's take a quick look here at the next graphic here. And I like this kind of helps explain kind of what the pricing trends are. Median is the middle point, okay, on any graphic or any statistic. Median is the middle point. So that means that over here on the far right side at 255,000, that's our median list price as of today. So half the homes that are currently for sale, single family resale, are above that 255, and half of the homes for sale are under the 255 price point. And of course, I always like to point out here that March 1st date here is the date where we kind of started to see the COVID virus kind of hit, and that's our March 1st benchmark, and that's really when we started to see stuff make some changes in our statistics here. So if you'll play along with me here, I'll kind of use a fishing analogy. When you're looking for homes in the market, and the median price, if you think about the top end up here is the surface of the water, and buyers are putting the pole in the water. They're looking for houses, and this is the middle point, halfway down to the bottom of the pond. And you can see that, you know, like I said, 255,000 is our middle point for homes for sale. However, the buyers so far this year, and this is pretty typical, especially in the first part of the year, they're fishing in the lower half of that pond. They're going below the median, and the median price currently, as of today, of homes being accepted is 2,099. Now, again, that doesn't mean that's where they'll actually close. That's just the median point of the current offers that are out there. This doesn't take into account negotiated purchase price. The red line at the bottom there is the sold price trending, and you can see that one is a little bit lower. And that's, again, going to be typical because the first of the year we do see our pricing start out a little bit lower, and then it goes up. And I've got a graph here to show you that in a second here. So we're through week 16. Let's take a little different look now at that same bit of data and just focus only on the median list pricing. And you'll see here, before we couldn't tell if we were ahead or behind of last year. So what I've done is, for year to date, I've overlaid 2019 first 16 weeks, and that's represented in that dotted line or dashed line there. The solid green line is where we currently are. And you can see that last year at this time, home pricing of homes listed was a little bit higher. And that kind of makes sense when you see this in another slide or two. You'll see this out on a full year basis. But the thing that we're seeing this year, ever since that March 1st date here, is that our market is kind of stalled. And I think it's kind of gone into a protective mode. I mean, we're not going up, we're not going down. I would say that it's probably good that it's stalled because we're kind of in that middle point there. Last year at this point in time, we were about $11,000 higher in properties for sale. And that just tells me that home sellers are kind of holding off putting their homes on the market. As we move into the spring market, the upper price point kind of starts to come online, and we're not seeing that right now. So for sale pricing, our pricing is pretty well flat. We're a little behind last year. I'm not concerned. I'll show you that in a minute why. The pending price. So this is the graphic again. The yellow line or the gold line is where we currently are. We're at 2099 is our current pending price, and a year ago we were at 199.9. So we're full $10,000 under or above. I'm sorry, above where we were last year, and this is a good sign for us. We actually started off the year. You can see we really never have dipped below last year's pending values. So that tells me that the market is stronger this year than it was last year. Home values are up a little bit, and buyers were willing to pay a little bit more. A lot of that had to do, obviously, with low mortgage interest rates. Buyers are able to afford more. So we would have naturally started to see a higher price point because buyers still have that idea of what they want to spend. And but the fact is that their lower mortgage interest rate allows them to spend that same amount of money and get more homes. So that's why we're seeing that rise in value there. The closed sale, and this is what's happened. Let's back up here. So the green is what could happen. So this is we could be selling homes in that median price range of 255. What is happening is we're selling homes under contract around that 2099 price point. But what has happened, in other words, what has closed, is this red line here, and we're at 201,428. And again, you can kind of see now with that red dashed line, we're above last year in closed sales. Again, most likely because of low mortgage interest rates, allowing buyers to buy a little bit higher. We started off the year a little bit higher, but once we get into about week 5 here, you can see we were pretty much mirroring last year's numbers until March 1st, which is right here. We were actually dollar for dollar with where we were a year ago. And then that's when everything kind of started to drop with mortgage interest rates, and so we've started to see the home values. So let's take this particular graphic and let's look at it from the full year standpoint. Right now we're only looking at 16 weeks. It's a little compressed. It's a little hard to really see overall what has happened. So I'm going to expand this out to a full year, and we're only going to see 16 weeks of 2020, but you'll see what happened all of last year for 2019. So the red dotted line there is our median pricing, how it goes up and down throughout the year. And you'll notice that we are pretty much ahead of last year in pricing. So am I concerned right now? Probably not. You notice our pricing has kind of gone flat. And typically what we would see is right in here, you would see this jump in pricing as we move into a full-blown spring market. More sellers come on the market, more sellers in the higher price point come on the market, opening up the inventory for more of those buyers who've been waiting for that higher priced inventory. So normally what we'll see is this spike right here. And of course, right now we're not seeing that spike. We're just seeing a leveling. However, what I do expect to happen is as soon as we come out of this COVID virus whole thing, this whole mess, I predict the market's going to just take off. I don't think we're going to see a drop down like we did here. This drop down happened last year, whether it was rates maybe jumped or maybe it's just the buyers were buying lower priced inventory. We don't know, but I think we're going to see, rather than see any type of a dip, I think we're just going to take right off, and we're going to see homes come on the market at a higher price point, and buyers that have been kind of sitting on the sidelines waiting are going to start to buy. So that's my optimistic view here of median sale pricing, and of course the list price and pending prices are also going to jump. So this will be an interesting graphic to watch throughout the year to see if we're on track, and so we'll just see what happens there. We talked a couple of weeks ago about back on the markets. In our industry, we call it back on the market. We call it a bomb. We're back on the market. And the orange line, or the kind of reddish line here, is 2019. And you can kind of see that our norm going into a spring market is about 20%, 19 to 20%. So in other words, 1 out of 5 houses last year at this time never made it to closing, whether it was because of inspection issues, appraisal issues, whatever. So we have seen a little bit of a jump this year, and it's not unexpected. I mean, we were as high as, I think it was 37% last 2 weeks ago. We were at 37%, dropped down to 35 last week, or 34 percent, and now we're back down to 30%. And this is a nice trend to see come down, but we certainly do have just a slight bit more number of homes, or percentage of homes, that are coming back on the market. And we've just got to attribute a lot of that to maybe layoffs, or people being furloughed, or buyers maybe having buyer's remorse in this. It's hard to say. So, but anyway, we'll watch this again. You can see up until about middle of March there, we were right on. We were actually below last year, so it was a good sign there. So we'll kind of back out now again, back out to, before we talk about open house traffic, look at year-to-date pending count. This is a year-over-year report again. The light-colored orange is 2020, and the darker line is 2019. And you can see that all year long we have been ahead of last year. And it's right about this first part of April we started to see a stall. And this stall is when we really started to see kind of some of the market slow down. And let me just back this out to the full year view. And it's right here. You can kind of see where we should have been on a trajectory back up. And by about June 1st should have been up around here. But in fact, right now, because of everything going on, instead of rising, we've kind of stalled a little bit. And I don't think this is going to be our peak this year, but it's currently our peak as of right now. But I think we're going to see again, as business picks back up, we're going to have a second peak. And years from now, we'll be able to look back and say that is where COVID-19 affected our marketplace. So for sale inventory, again, here's year over year. The light green is our current inventory. And like I said, we're at almost 3,500 homes for sale. A year ago, we were at 3,446. We're kind of, again, you see this flattening right here. We had a nice jump a couple weeks ago, and then it kind of has stabilized again. This tells me we have a lot of pent-up demand. We've got sellers out there that are testing the market a couple times. Maybe some of this inventory rise is due to the back on the market inventory. We can have an increase in inventory for a couple of reasons. One, we have more people coming into the market, more sellers coming onto the market. And the other is that the buyer pool is not out there buying homes as fast. And therefore, that's maybe causing some of that inventory to sit longer. So it looks like an artificial rise in inventory, but it's really not. So here we are, year to date, just this year. And again, you can kind of see there was that stall that I was talking about, the jump a couple of weeks ago. I would just say that our market's kind of in a sputter mode. I mean, it's running, the engine's running. We're still selling houses. I saw an agent this weekend that was saying everything's great. I sold 2 homes within 24 hours. That's wonderful, but that's certainly not the norm. The market is not necessarily hot. It's out there for those that are buying. And so you are going to see pockets of situations where homes are selling quickly, but not a lot of them. Okay. So spreading this out over the last 11 years from 2009 to date, you can see we were on track. After 2017, we started increasing our inventory, and this might be the year we kind of stall that rise of inventory. We certainly have had inventory issues over the last several years, but 2017 we started to see that start to rise back up again. And hopefully all this gets past us. I think we'll be back up. Otherwise, I would say we would be well on our way to increasing inventory. So year-to-date months of inventory, this is all properties for sale. We are currently at 2.9 months of inventory. Again, 2.6 was the point where we kind of saw COVID kind of take effect. And if you overlay where we were at last year, which is the blue line, we were at 3.2 so a year ago in March, and 2.6 this year. And you can see that the blue line continued its downward turn, where 2020 has started back up again. This again is just the slowing of our marketplace. It's about a 14-day slower period on the market with 2.3 to 2.6. So nothing to worry about. We're still well within, overall, we're still well within a seller's market. So not bad at all. Okay, this is the weekly open house counts. And yes, we did get our bounce back from last weekend. Last weekend, of course, was Easter. And every Easter, we have a period of time when most homes are not on the market, or I'm sorry, are not held open on Easter Sunday. And so we knew out of 100 homes last week that were held open, 12 were resale homes. This week we had 295 homes, almost back even with the previous 3 or 4 weeks before that. However, you can notice that the resale homes, the owner-occupied resale or owner possibly vacant resale homes, continues to drop. We only had 40 homes in our marketplace that were open that were not new construction. And overall, that 295 represents 8% of all of our home inventory. We should be seeing close to the 30, 35, 40% of our inventory right now if we were in a normal market. In fact, let's take a look at that. Moving out here year over year, the red line shows you our open house counts last year. And of course, this dip that you see in the red line, Easter was this week last year. So that's why that dropped, just like our week this year dropped the week before. And you can see that we were well on our way to open house traffic being around that 900 to 1,000 count. And at one point, oops, I just hit my button there. We were at one point we were almost over 1,200 homes open. So this will be a good indication of what's happening with open house traffic over the next few weeks after COVID comes back. I honestly have said this every week. I honestly believe that open houses are going to be different. They're going to be probably gone for a lot of home sellers. They're going to rely on us as realtors to be doing more virtual or 360-degree virtual tours. So I just don't see open houses coming back quickly. I think they will come back, but I'm not sure they'll come back to the full extent that we've been used to. So last graphic before I close or open it up for questions here. This is my weekly dashboard. Yes, it's busy. Yes, it's a wealth of information though. And I've highlighted the one area here that I would want you to take away for this week that's a positive, and that is that we are back on the rise again for weekly pending sales. This past week we had snow. We had 2 or 3 inches of snow in a lot of places here in the metro. It didn't last very long, obviously, but that just gives you an idea that we have good buyer demand. The new listing count is still down. We're downward again. We only took on 246 new properties into the MLS last week. But yet we saw kind of a flattening or a rise, and some of that is because the back on the market percentage and stuff. So 171 homes closed last weekend. In fact, I was watching online and one realtor had posted there's 100 closings at Wasker Law Firm last Friday. I believe that. Now, how many of those hundreds were refinance, I don't know, but I do know that buyers are still buying and they're still closing. So this graphic is always on Simply Des Moines Stats, Facebook, Simply Des Moines Stats, or Simply Des Moines. I'm doubling up my graphics on both of my business pages. Simply Des Moines Stats on Facebook is absolutely the place where all of my graphics live. So if you're just out there looking for stats, that is the place to go for that. The other part is, got other stuff on there. So I'm going to unmute everyone since there's not that many here. And Kevin Duffy from Cincinnati, Ohio. How you doing, Kevin? Can you hear me?
Good, Les. How you doing?
Good. Thanks for joining me. Kevin and I are in a network group together. I'm glad to have you aboard.
Your stuff is amazing. I just wish I could see it in Cincinnati version.
Yeah. Well, fly me out there for a couple of years.
Yeah, I could do that.
Libby,
Yeah.
you go outside and go potty. Libby,
So,
go potty.
Somebody's calling the doggy.
Girl.
hang on. Somebody's letting their dog out. Crystal, Do you have any questions? You were here last week. Thanks for coming back.
He's still out there fucking destroying the lawn. He's on.
All right. I don't think that was a question. Ken was here and we lost Ken, our broker. Kevin, what are you seeing in your market in Cincinnati? Are you seeing kind of some of the similar stuff we're seeing here?
I think it is similar, Les. One thing, I don't know where your market is, but we still have more pending than for sale.
Yes. Yes.
What do you have? What's your numbers on that?
Our pending counts are, well, let's see, I think that should be on that last graphic there. Let me just back up to the pendings here. Year over year, we're currently at 2,535 pendings. Now we don't have more pendings than we have homes for sale. Our homes for sale is around that 3,500 mark, but we're still ahead of last year. So
I'm seeing more coming soon, which I've never been a fan of, and I'm certainly not a fan of the new NAR regulations.
Yep.
But I tend to agree with you that there's some pent up sellers and there's some pent up buyers that are going to be coming along. Some of my friends are like, well, everybody's unemployed. And like, well, wait a minute. If 30% of the country was unemployed, that means 70% is. So I share the optimistic viewpoint like you do.
Yeah, well, very good. Well, is Ohio on a shelter in place right now, or are you kind of doing?
We were on it like day one.
Okay.
Yeah.
Okay. And real estate is an essential service, correct?
Yeah. Yep. Still been out showing a lot, really. I mean, every other day at minimum.
Okay. That's good to hear. So Cincinnati is a little bit larger market than ours. I think similar in pricing. What's your median sale price is, Kevin?
I know our numbers are very close. Let me go over here. I'll grab it. But our inventory, I think, was around 3,100, which that's just single family. But no, I haven't looked at the. I'll pull that up though.
Yeah, and our single family is right at that 1,800. That's all on the dashboard here. So, Crystal, I'm going to unmute you again. Did you have any questions for us here?
Nothing right this very instant, but
nope. Okay.
Here's another conversation.
Yep. All right. And anonymous is just my iPad off to the side so I can see what you guys are seeing in case we lose a satellite or something here. So, all right.
All right. I'm going to get to this number here, Les.
Yeah. So while you're looking for that, Kevin, again, for everybody else that'll watch this on the recording, the dashboard is broken down into 4 segments: single family resale here, condo townhome resale, and then on the other side of the open house counts, I've got the new construction broken down so that you can kind of see where we are in the different segments. It just makes it a little bit more clean when you're trying to say, market's up or the market's down. Well, which segment of the market are you talking about? So find it yet, Kevin?
Here we go. You know what? It's still showing. Okay, so they have the most recent I have is February, but if we look at average price, 222,270 of February 220 of 2020. Okay. That's our average price. Median's 182,700.
Right,
and
so you're not too far off from us.
No, it doesn't sound like it.
So cool. Well, I usually try to run this about 20 minutes. I've gone a little bit over tonight. Thanks, Kevin, for stopping in. I appreciate the chat, and I invite you back next week. And I do this every Sunday night right now, about 5 weeks in, and I think it'll be something I'll continue to do. And hopefully over time we'll get people on here live with live questions. And in the meantime, we'll thank you again. And I'm going to sign off so that we can kind of get back to our lives on Sunday night. So thanks again, Kevin. Talk to you guys all later.